Gold will hit $1,600 in 2020 as the case for diversifying into the precious metal is as strong as ever. That's according to a recent report from Goldman Sachs, which says that political uncertainty and late cycle concerns will likely support investment demand for bullion as a defensive asset. Joining me to discuss the outlook for gold in 2020 is Mark O'Byrne, founder at Goldcore. Mark, good to see you. So we've already rallied by about 20% over the last 12 months. Can there be further upside for gold in 2020?
Yeah, I think so. I think the outlook it's as bullish as it has been in a long period of time. We've had, as you said, good gains this year, 15 to 20% year to date, but a bit of a pullback recently, which I think was healthy. It looked like gold got a little bit ahead of itself, so we've had a bit of a consolidation recently. But yeah, I think you mentioned Goldman Sachs. Most banks internationally, most analysts of the gold market are bullish. There's very few who are bearish at all, given the wider backdrop, the macroeconomic situation, the monetary situation and the geopolitical situation. There's some really fundamental pillars that look set to drive gold prices higher in 2020.
So what are some levels we should be watching? What are the key targets, say, for the year end next year?
Yeah, I mean, as ever, it's very difficult to get into specifics in terms of prices in the short to medium term. But I think we'd be confident. As we said last year, we thought we'd do 15-20%. This year, we did do 15-20%. I think this year we're even more bullish because the fundamentals are bullish. The global economy appears to be slowing down. The issues around trade wars and Trump's aggressive stance and on that side of things and China's reaction to that is creating quite a degree of economic uncertainty. The global economy, you can see it in all the data internationally, the global economy is slowing down, and then I think the policy reaction to that is going to be, we're already at extremely loose monetary policies, and it looks like we're going to move to ultra loose monetary policies. So in that environment, it is particularly favourable towards gold because the dollar, the euro, the pound, these fiat currencies are going to be devalued, and therefore I think gold doing 25 to 30% next year is quite possible, and that would put, if gold finishes, say we finish whatever 1450, 1500, you do 30%, we could be up to the 1800 level in 2020.
I mean, is there a risk, though, that with some of those political risks subsiding, like the trade war and Brexit, that risk appetite could actually be a little bit higher than many people are expecting? I mean, that could potentially dampen the demand for gold, do you think, in safe havens?
It is a risk, but I think it's quite a low risk in the grand scheme of things. I think you're right about Brexit. I mean, that with the Conservative victory, that is less of a risk, particularly in the short term and the medium term. But I don't think the Trump trade wars issue, obviously we've had this announcement recently about a phase one agreement. I don't think that uncertainty is going to go away anytime soon. I think potentially it will escalate, and there's other geopolitical risks in terms of the tensions with Russia, and the problems in the Middle East are far from resolved. Tensions with Turkey and Iran, and the whole Middle East obviously looks like a powder keg. So I think the geopolitical risk is here to stay, and it's we just mentioned those countries, but around the world we're seeing the rise of nationalist parties, and I think that's going to lead to more the trade wars that we were beginning to see. I think we're going to see more of that, and we're going to see more nationalistic policies, and then you're also going to see currency wars where countries need a lower currency to maintain their exports, and you might see almost certainly see competitive currency devaluations.
Well, you mentioned the currency markets. I wanted to ask you about the correlation between the US dollar and gold, because we've seen it break down really over the last year quite a lot. We've seen this rally in the greenback that's gone hand in hand with the rally that we've seen in gold. So we've seen strong performances across both. Do you think one will have to give at some stage, and why is it that both have been able to rally in tandem?
Yeah, we've seen that quite frequently over the last 15-20 years. There are periods of time where gold and the dollar do increase in value, but over the medium and long term, the dollar, the euro, the pound, they're all losing value versus gold. So if you look at, there's a one website that we feature quite frequently in our market update, goldprice.org, and in there they have a wonderful table that shows you the performance of gold in all the major currencies in the world from 15-20 years. So you get the annual performance every single year, and then you get the average over the last 15-20 years. And I actually have pulled it up in front of me. So it's up gold is up 10.8% per annum in dollar terms since 2004. and in sterling terms, it's up 12.5% per annum. So you're right, in the short term, there can be correlations with individual currencies, but over the long term, gold tends to be a hedge against the devaluation of all these currencies, particularly the dollar. So I think what we've seen the dollar this year, I don't think that's going to continue, because I think Trump is obviously he's spending a lot of money. The deficits in the US are going to $1 trillion plus. So I think the strength we've seen in the dollar in recent months will be very short-lived indeed. And I do think the dollar will come under quite significant pressure in 2020, because $1 trillion deficits, the nominal debt in the US is now 22 trillion, and they've unfunded liabilities of between 50 trillion and 100 trillion. So that's Social Security, Medicare, Medicaid, and these are real liabilities, and the baby boomers are going to retire. So whether it's Trump's re-elected or whoever's re-elected in 2020, the trajectory of the US is actually towards insolvency. That's the way they're headed as a country, unless somebody really puts gets their hands on the levers of financial power and puts manners on the finance of the US, because the trajectory is not good.
So there seems to have been quite a lot of focus on this gold to silver ratio recently. I mean, where do you stand on the outlook for gold versus silver? Which one do you think will perform better in 2020?
Yeah, silver looks fundamentally undervalued against gold. Gold looks undervalued versus the S&P 500 and bonds and most leading benchmarks internationally. But silver looks even more undervalued versus both gold and these benchmark indices. So silver, the ratio today is about 1, again around below 80 to 1, and the ratio throughout history is around 15 to 1, and in more recent history the ratio is around 50 to 1. So I'd be fairly confident in the medium and long term that ratio will revert to the mean, and we should see silver back at a ratio of 30, 40, 50 to 1. So that means gold is going to 2,000 by late 2020, 2021, which is quite possible. Divide that by, say, 50, and you get silver at $40 plus. So, yes, and that's because the supply-demand equation for silver is even more favorable than gold. A lot of silver has been used up in industrial applications over the years, and so silver is, it looks undervalued versus gold for a variety of reasons, and it is correlated with gold. When gold goes up 1-2% of the day, silver will go up 3-4% of the day, and conversely on the downside, when gold goes down 1 or 2% of the day, silver will go down 3-4% on the day. So it tends to be a leveraged form of gold, and it's highly correlated with gold. So when gold goes up, silver goes up, and it tends to go up by more, and we've seen that throughout history and in recent years again.
So finally, Palladium has had a pretty good run recently, rallying by, I think, more than 50% to scale fresh all-time highs again. I mean, do you think the supply and demand fundamentals favour Palladium next year as well, or are prices starting to look a little bit toppy?
They definitely look toppy in the short term. We've had a very big move up indeed, and it's probably a good time for people to take profits after seeing a move like that, and keep the stop losses tight. Who knows? The supply demand is still quite favourable in Palladium. I think in the medium term, 2021, it could potentially go higher after a very sharp correction. But it is, unlike gold and silver, it's not a safe haven asset. It's not a hedging instrument. It is a speculative commodity. It's a speculative precious metal. It is very dependent on the demand from the industrial sector, particularly from catalytic converters. So with the global economy slowing down and the global car industry slowing down, I think that significant demand is likely to fall at some stage, and then the supply-demand imbalances will correct. So I will be nervous about Palladium, and it's it's very much a speculative play, and I suppose a trend-following play. But it's highly volatile. You just need to be very, very careful with it.
Mark, thank you so much for your time.
Pleasure, Victoria. Thanks for having me on.
That was Mark O'Byrne, founder at Goldcore. I'm Victoria Scholar, and thanks for watching IGTV.